Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the first webinar of 2025. Happy New Year to all of our traders, all of our users. Hope you have a great 2025 in the markets. Today's webinar, Thursday, the 2nd of January. We're going to be using our usual regular run through in here, take a look at what we've had, what we've got coming up. Quick look at the calendars. I warn you, it's going to be a brief webinar. There's not too much to talk about right here, right now. So I'll cover it briefly, go through what we need to go through, tick the boxes, and then let you get on into the market. So first of all, let's start with the calendar. Well, we do have actually some data today. So we have the PMI data being the beginning of the month. So PMI data from Europe so far. As you can see, France and Germany coming in bang in line with expectations. Eurozone, a very minor miss and a small miss as well for the UK. Looking forward in today, we also get for the UK. Remember, this is the S&P global data, so not as important as the ISM data, which we don't get today, actually. So today's S&P Global data for the US at 9:45. Usually you get 15 minutes later, but I think we're going to get that tomorrow. Let me just jump ahead. Yeah, the ISM data comes out tomorrow. So just because of the beginning of the year, the holidays, etc., a slight mismatch in those. Usually they're on the same day. But so we are going to be watching then for S&P Global US manufacturing PMI data, 9:45 Eastern time today. That's the main focus on the data front. And then just a little look ahead to tomorrow. We've got the ISM data tomorrow. Barkin also speaking tomorrow, but we'll take another look when we come to tomorrow. Just looking ahead, because there's not a lot to talk about really in here today. We are about to enter earnings season we're obviously in Q1 and just going into Q1 of 2025, but not for another couple of weeks yet. We really kick off with the major banks and financial stocks in here, not until Wednesday, January the 15th. So it's still a couple of weeks away yet, but I just want to give a heads up that is up and coming as we go into the month. Earnings season starting in a couple of weeks. And then also just a heads up, it almost feels like we only just had the last Fed meeting because we've had the holiday season. But we do get the next Fed meetings now at the end of January, and the blackout for that starts on the 20th. So we've only got, effectively, after this week, we've only got 2 weeks of Fed speakers, and then we go into the blackout period before the next Fed meeting at the end of January, the 30th and 31st, with the outcome coming on the 31st. So just looking a little bit further ahead. There's not much in the way of news, really. In here, in the morning briefing, America's focusing on the attacks we've had in the US. To start off the new year in both New Orleans and Las Vegas, raising security fears. Markets not really reacting negatively, though. Markets are up in here this morning. Still investigations ongoing in here. One thing we do get today, which is not the actual normal database, is the sales data for Tesla, the end of year sales data. We do get those today. And I'm pretty sure these usually come after the bell, so they're obviously not on the earnings calendar because they're not earnings numbers, they're just sales numbers for the quarter. So Wall Street isn't sure the car kind of was its first annual sales decline in over a decade. So we're going to have to wait and see for those numbers later today, which I think they're pretty much after the bell. They usually come. So we're watching out for those later today. So that's the other piece of news to watch out for as we go into the trading day today. But US stocks are actually up, set for a bounce. We're a 4-day losing streak into and through the holiday season. We'll take a look at charts shortly, but effectively what we did, we sold off after the Fed, rebounded into the holidays, sold off through the holidays, and now rebounding again today. And that is despite Asian and European stocks actually down in here this morning. So we had a 4-day losing run going into the end of the year, starting off the year on a rebound in here. So futures rise ahead of Wall Street's first trading session. World shares start to wobble. I think this is just rubbish on Trump trepidation. It's nothing to do with Trump. It's just, European and Asian stocks were just down. US stocks were down at the end of the last trading session of the year for them, and they're playing catch up with those. If you do have a Bloomberg subscription, or I'm not sure whether this one might be open to all, probably not, knowing Bloomberg. But if it is, take a look at this. I haven't gone through this yet. It's quite long. Here's almost everything Wall Street expecting 2025. It's obviously big picture stuff, but I think it's good to know this stuff. So if you do have access to Bloomberg, take a look at that. I've got that one bookmarked. I'm going to be taking a look at that after we come off the call today. Just a quick run through on the overnights then. So as I say, Asian stocks were down. Nikkei nearly 1% and over 2% on the Hang Seng, which had its worst start to a year for a decade for the Chinese stock market. European stocks, little change really for the most part. The UK FTSE actually slightly up. The German DAX down just under 0.3, but a significant sell-off, 1% down on the French CAC this morning. But if then we look at the US futures this morning, significantly higher. The Dow up 0.8, just under 1% up already on the S&P, and over 1% up on the Nasdaq. So a solid rebound today so far this morning, ahead of the cash market opens. If we take a look at expectations for rate cuts in here going into the month and into the year. So for January, we are very much expecting unchanged. So this is unchanged. Very little chance of a rate cut in January. Fed going to be on hold, and then we're looking then potentially now for the first rate cut of the year to come in March. And there's almost a 50-50 on that. You can see in here, this is unchanged, and this is for us a slightly more for a rate cut, but almost like a 50-50 on whether we get a rate cut in March as the first rate cut, and then May, not expecting any further cuts. You can see this is one rate cut in here, so very outside chance we get a second rate cut in May. June, same kind of thing in here. This is one rate cut. This is no rate cuts here on the right, one rate cut, and then so still only not a 50-50 chance, less than a 40% chance that we get a second rate cut by June. If we go to July, same thing in here. So this is one rate cut in here. So chances are more chance of there being only one rate cut again than two rate cuts by July. We head out into September. Slightly growing chances now. So we've got 34 plus 13. So this is for one rate cut here. So we are now like 50-50 by September for the second rate cut. And then by October, December, certainly pricing in a rate cut. So effectively, the market's pricing in rate cut in March, and then effectively no rate cuts till the fourth quarter. So it's going to be interesting to see how that dynamic is almost certain to change one way or the other, right? That seems to me either too dovish or too hawkish, depending on where the US economy goes. So at the moment, the market kind of sitting, I think, in no man's land. I don't think this is not going to be how rate cuts or pan out through the year, in my opinion. It feels like we're sitting in no man's land rather than pricing in, because the market is very unsure of where we get a lot more rate cuts or far fewer rate cuts, and potentially even, who knows, a rate hike going into the year. So who knows where we're going to go with that. But certainly I don't think this really reflects, certainly from May onwards, really reflects where we'll end up being for the year. If we go and take a look at the bond markets, as well as moving on from the interest rate markets, we're effectively kind of sideways through the holiday season. So you can see here, this was the spike up in yields that we saw after the Fed back on the 18th. And then the market's been really choppy, a slight move to higher yields, back to lower yields, and today moving back to lower yields. That should be supportive of stocks with the lower yield move this morning. And as I say, we've had a significant rebound. So there's the sell-off that we saw here on the 18th after the Fed. Going into the holidays, we saw a rebound into the holiday season, so into Christmas basically. Then between Christmas and New Year, a sell-off, giving back the Christmas rebound, and then this morning rebounding. For me, all the risk is still higher going into the day. I think, we saw that rebound. We've got, a higher low in here now put in today than the low here. We did undercut this low here, so we got a lower low here. But nevertheless, I think we're setting up for a more positive tone going into today and into tomorrow. That's on the ES, by the way. Go take a look at the Nasdaq. Similar thing in here. We've almost already got a bullish outside day. If we clear yesterday's high, not yesterday's high, the high for the last trading day of the year from the 31st of 2024. The high there is 21,524.75. So above there signals a bullish outside day, and then would open up risk up towards like 21,700. So I still think there's some more upside to go in here today. I still think we can rally further, but we'll have to wait and see how we go. There's no technical analysis reports up on the site at the moment. They will resume. We'll post those after the bell this evening, and you'll get fresh technical analysis reports going forward on a daily basis as of tomorrow's markets. Okay, so we'll resume them again from tomorrow or posting them tonight. All right, guys, I'm going to wrap it up there. Not much more to say. So I'm going to wrap it up there. I'm going to wish you all a great trading day. I'm going to wish you all a great 2025. Lots of changes coming to trade day in 2025, by the way, guys. We've got lots of things planned. Lots of things changing in the industry, lots of things trading at trade day as well. Watching out for those. I can't say any more at the moment, but it's going to be an exciting start to the year. So watching out, and we'll keep you informed as things develop. Have a great trading day, guys. Take care. Stay safe. Bye.